morning. Hello and welcome to Money Control's live stream. You're tuned into a fresh edition of Opening Bell with me, Lovisha Darad. And we're waking up with 4.0 magnitude earthquake tremors, which we have felt in the national capital. But we can say, it's safe to say that the tremors felt in the Dalal Street is not too different either. 8 straight days of losses, and Nifty has logged in the last session, which is the worst we've seen in 2 years. And even today, the GIFT Nifty is pointing out to not a good start either. Since majority of the recoveries that we are seeing in the market is attempting to make is not getting sustainable. So we will watch out today if there is any meaningful rebound today and in fact in the entire week. But to start off, the global handover is quite okayish. Asian markets are trading on a mixed note this morning. Japan's Nikkei 225 is flat after Q4 GDP data has beaten estimates. Even the US markets ended Friday on a lower note. However, what we can speak as a good news for India is the easing treasury yields. It's back below that 4.5% mark, and even the US dollar index is hovering around that 107. So from 109 peak to 107 at this point of time. Also, a plus is your oil prices, which have fallen below $75 per barrel after US President Donald Trump did make out some remarks to end the Russia-Ukraine war. So we will be keeping all of this in our mind as we head off to today's trading session. Don't forget to type in your stock related queries on our live feed, and our market expert will be answering all of them. Now let's quickly take a look at the top headlines this hour. Wall Street closes mixed on Friday, but indices end the week with gains on encouraging inflation data and more certainty over President Trump top policies. Asian markets trade mixed. The Japanese Nikkei trades flat as fourth quarter GDP growth beats expectations. The GIFT Nifty is indicating a lower start for the Indian markets. Crude prices dip on Friday with Brent crude trading below $75 per barrel. Gold prices also see profit booking with prices falling under $2,900 an ounce. At least 18 people lost their lives and over dozens were left injured after a stampede in New Delhi railway station on Saturday night. The incident occurred as crowds surged while awaiting to board trains for the Mahakumbh Mela. And the capital also wakes up to a strong tremor as 4.0 magnitude earthquake hits at 5:30 this morning. All right. Last week we saw that the Dalal Street saw quite a bit of a wild swing. 8th straight day of losses we have seen, and Nifty has declined and has fallen more than 2.5%, which was its record close since May last year. All the sectors were battered, and even the valuations have now hit about a 15-month low in dollar terms. Not only this, but India's market cap has also fallen to about 8-month lows. If you look at the broader markets, they have seen deeper cuts compared to what the benchmarks have been witnessing. Mid caps are now down about 18 to 19% from the September highs, and even small caps have slipped over 20% from their highs, which is an official indication that small cap index has entered into the bearish territory. Now, this week, what we need to watch out is for the US President Donald Trump's tariff front. He has been talking about reciprocal tariffs, so that has raised eyebrows, and India is also planning to reduce tariffs on 30 different items of the US imports. So that is something we'll be keeping on our radar. Another is your FII flows and the rupee-dollar movement. If you look at rupee, that went till 88 per dollar, but now we are somewhere around 86. So that is some kind of relief that is coming in. But moving on, let's look at how today's trade setup looks like. First up is your option queues data. Nifty put call ratio, it has fallen to 0.7 from 0.9 from previous session. So we can say that there is a bit of cautiousness, nervousness, which continues to prevail in the markets. F&O ban list, well, the stocks that have been added includes the like of Deepak Nitrite, retained none of them, and remove from the F&O ban list is your Manappuram Finance. And next is your fund flows data. FIIs have sold about 4,300 crore rupees of worth of Indian equities. However, DIIs have offsetted this selling pressure and have bought around 4364 crore rupees worth of Indian equities. So once again, DIIs have helped out a lending hand at this point of time. just a couple of minutes before we go to the opening bell, but if you look at the pre-open rates, not a good picture coming in. Sensex is down about 300 points, and Nifty is also down about 100 points at the pre-open rates. But on that note, let's quickly get on board with the technical expert of the show. We have Sudeep Shah, head of technical and derivative research at SBI Securities. Sudeep, let me start off. We are now below 23,000. Can we expect 22,800 to act as a good support for Nifty, or can we expect a further downside?
Good morning, Lovisha. Lovisha, see, 22,800 is very close by. What I feel is, see, after that fall of, say, 3% in the last week, we've almost corrected by 13% from the peak and approaching that 14-15% mark, which is a sacrosanct level with the previous corrections also, wherein we had seen some kind of a relief rally or some kind of a rebound level. Now, important to know is that last 8 sessions, Nifty has had a negative note. Nifty has closed on a negative note, which is for the first time after February 2023, if I'm not wrong. So almost 2.5, almost 2 years now, Nifty has never had a 8 consecutive occasions of losing streak, and such instances are very rare and sometimes act as a probable trend reversal points. So what we feel is that from the current price when Nifty is trading at 22,600, 22,700 band is a crucial support zone. There is a falling trend line also where this zone 22,600, 22,700 range would act as an important support. So what we are feeling is that after this fall in the last couple of weeks, which has been very steep. Now 22,600, 22,700 zone will hold the key, and we expect some kind of a reversal from this current this support zone up to 23,000 or 23,200 on the upside.
Okay, all right. Sudeep, what about the Bank Nifty? That has stood out well when it comes to the 1 month charts compared to other sectors. So, do you expect the trend to stay for the Bank Nifty index?
Absolutely. See, Bank Nifty, we feel 48 500, 48 400 zone will act as an important support on the downside. It has stood out in the last couple of weeks. At least the fall in Bank Nifty has not been in line with Nifty. And important noteworthy thing here to note is that HDFC Bank, ICICI Bank, Kotak Bank, all these three banks have demonstrated resilience. So for me, that is an important takeaway. And till we see these three banks holding well, Bank Nifty is due for an important reversal from these current levels in the coming week.
Okay, all right. Let's see how the markets have opened. Well, the first rates coming on your screen, 22,800. Well, we are below that 22,900 as well. And now we are at 22,800, 100 points downtick, more than 0.5% cut coming in for the Nifty 50 index. If you look at the, advanced decline rate, definitely the declines are taking an upper hand. Right now, the advances are giving a tough fight too at this point of time. Bank Nifty index also has opened on a lower note. We can see 48,813 that is coming in for Bank Nifty index, about 0.5% cut coming in for the Bank Nifty index too. Sensex plunged about 500 points. Again, both the benchmarks are seeing more than 0.5% cut coming in. If you look at the volatility index, that have spiked up. India VIX jumped about 7%. It is trading above that 16 odd levels. All of the sectoral indices have drowned in the negative territory. The worst hit is being observed in the Nifty Auto Index, Nifty Media Index, Nifty Pharma Index is also not doing well. Nifty Realty also seeing a sharp cut of about 2%. Mid cap and small cap indices, if you look at the end of the broader markets, they're seeing deeper cuts. Mid caps are down about 2% at this point of time. Small cap too seeing a selling pressure and seeing a cut of about nearly 2%. So definitely we have not started the day on a good note. 8 straight day of losses that we saw today could be the 9th day too. Top Nifty gainers at this point of time, only 3 gainers are eking it up some slim gains. Sun Pharma, Cipla, some of the pharma names taking up and featuring in the top Nifty 50 list. Sun Pharma with about 0.3% gain, Cipla with about marginal gains seeing, and HUL from the FMCG back Nifty FMCG index heavyweight seeing a gain of about 0.1%. On the other hand, if you look at the top losers on the Nifty, that includes the like of M&M seeing a sharp cut of about 3%, Bharat Electronics 2.5% cut, Tata Steel with 2.5% cut too, Shriram Finance, ONGC, NTPC, all of these stocks not doing well too. Sudeep, what about in the metal space? How does it look on the charts? Because some of the counters did see heat last week also due to the 25% tariffs that came in from US.
Let me see a couple of things going across in the metal space here. One is that the tariff news which is there, and because of which we have seen the metal stocks and as well as the metal index itself being in a negative momentum. Last 2, 3 sessions, we have seen metal index correcting from a high of 84.50, 84.60, right up to this 8050 mark, which it's trading currently at. Uh, the trend is negative, but there's one important factor that we should not be missing out right now, and that's the dollar index that has corrected from the higher levels up to 106, half 106.70. So somewhere in the coming week, if metal index crosses about 8200 on the upside, we could see some kind of a short covering move in this index. Till then, the trend remains negative. 8200 remains an important resistance on the upside, and above that, there could be some short covering move.
Okay, all right. Sudeep, then if we look at some of the AMC stocks, how should investors approach it? Because market is also correcting at this point of time. So how does this space look like?
Uh, See, AMC stocks, if someone is looking at this entire space, whether it is the AMC stocks or the capital market facing in stocks, this the entire pack was in a sweet spot right between, if you see, from September, October last year up to Jan 2025, that is in the previous month. And in the last month, we've seen a steep correction, the way markets have behaved. Obviously, it's a function of that. But what I feel is that from a long-term story perspective, yes, this space is really very good. But from an extreme short-term perspective, we need to wait for some kind of a reversal. So if you're a long-term investor, then this is a good price to enter, and maybe there could be some further dip also. But you'll not get a this is a much better price than it was available last month. So what I can just say is that yes, from a investing perspective, this is a good time to shop a few stocks. But from a trading perspective, we should still just wait for some kind of a reversal signals and then go aggressively. Some kind of a reversal signals and then go aggressively long term.
Okay, all right. Let's move to some of the stocks in focus. Definitely your Aditya Birla Fashion Retail that came out with its Q3 report card. The stock is seeing a bit of a slim gains in this weak market. 0.2% gain coming in for ABFRL. And we also have a viewer query on ABFRL. Satya is asking whether or not it is better to shift from Style Bazaar to ABFRL for the next 1 year, and what looks positive, or should we hold on to it? But first up, the company did see a Q3 net loss which narrowed to about 51 crore rupees from 78 crore rupees. Revenue has also grown by 3% year on year in Q3, and EBITDA has seen a sharp uptick of about 15% year on year. Sudeep, the past 2 months has been difficult for the stock. Can we expect it to reprieve?
Uh, yes, Lovisha. If you see ABFRL, the results have been announced yesterday, and I guess lot of that is now into the price now. So what we feel is from the lower levels, this recovery also from 237 up to 250 right now. This early morning, this 5 minute recovery does say that I feel now here from here we are very close to a short term bottom in this stock. It's taking support at that upward sloping trend line also, which if you see from right from May 2023 has held well. So what I feel is that from a risk reward standpoint, 235, 238 zone now remains an important support. And regarding that query of shifting from Style Bazaar to ABFR, I think yes, that could be a good choice given the way both the stocks have corrected, but ABFR has corrected lesser, and the other name is underperforming the entire space. So that could be a good tactical shift at this current junction.
Okay, all right. A good shift at the current juncture. Let's move to another viewer query. Well, Anand Swaminath is asking the view on Tech Mahindra. He says that he has bought the Feb call option at 1700 and he's seeing a terrible loss of about 57%. What should he do at this point of time? Tech Mahindra on the charts after 10 to 11 December, the stock has been on a negative trend. Sudeep, how does it look like on the charts for you?
Lavisha, it's not only Tech Mahindra, but most of the IT large caps have gone into a range now. So although they are not negative, but they have entered into some kind of a trading range, and which is why the option premiums are being eaten away. There's a lot of theta decay happening there, and that is the reason he's losing money here. So my sense is to come out of that option and just approach some stocks, say maybe a Kotak Bank, Bajaj Finserv, or other large, mid to large caps where there is some kind of a decent traction and there's a good stock option liquidity available. So here I feel until and unless 1675, 1680 is not crossed on the upside in Tech Mahindra, it could stay within this range of 1630 and 1680, which could further decay the premium. So my sense would be to come out of this and look for other opportunity as the market presents.
Okay, all right. Let's move to another stock in focus, that is your Utkarsh Small Finance Bank. The company did report a net loss of about 168 crore rupees against last year's profit of 116 crore rupees. Even NII has fallen marginally and asset quality has seen quite a bit of a deterioration. Sudeep, if you look at Utkarsh SFB, the stock is sharply down by 13% in the past 5 days. So how does the near term look like for the stock?
Let me say the near term as well as the short to medium term, the entire structure is quite weak. The stock is right from last year, in fact, from Feb 2024, while the markets were still decent, the stock was witnessing selling pressure on every rises, lower top, lower bottom formation is visible on the weekly as well as the monthly charts. And that is why we feel that even if there is some kind of a recovery from lower levels today, that should not be bought into. One should just come out of this and look for quality names. And even if there is some kind of a pullback from the current levels, should not get trapped into that. The numbers are not in sync with what ideally should have been in this entire space. And we feel that it's better that you shift to some other names, maybe the large cap banking names or NBFCs would be a preferred choice right now.
Okay, all right. Today also the stock is seeing quite a bit of a sharp fall. Well, 9% downtick coming in for the stock at this point of time. Well, let's move on to another viewer query that Naveen is asking his views on Bharat Electronics, and he's saying that the average price is of about 290 and he has seen a loss in 16%, whether or not he should hold or he should exit the counter at this point of time. Sudeep, what do you suggest for BEL?
Lavisha, see, the entire defense space had seen a corrective move in the last couple of weeks. We've seen a lot of the excess move, if you say, in the last 1 year, right from, say, March 2023 up to August 2024. There was a big rally now in all these names where the stocks have doubled or tripled or even have moved 4 times. So, from the higher levels, we are seeing the entire rally from that entire rally's perspective around 25 30 35% corrections are coming, and now the stock specifically in case of BEL is now approaching an important support zone. So 235 237 is that support zone which I feel will be very critical, because before that entire rally happened in April 2024, the stock was consolidating between this 230 and 240 mark, and then it broke out. So once again, the stock is approaching this zone, and that will be critical. So he should, in my opinion, he should just hold on. It's a quality name. It's just that the market cycle is not favoring right now. But whenever the defense names would come back into picture, this would be the first stock that could see some kind of a buying, decent buying from lower levels. So ideally, you should be holding this stock and just stay patient.
Okay, just to stay patient at this point of time for BEL. Another viewer query is on Glenmark Pharma. How does the stock look like on the charts, Sudeep? Good set of numbers that came in from Q3. Top line, bottom line performance, both were quite good. But on the charts, how does the stock look like?
Let me just see the stock is in a downtrend in the last several weeks now, right from the start of 2025, where the stock was around 1650. We've seen a 15-18% correction in this stock, and the numbers were decent, and that is the reason we are just seeing some kind of a buying support from lower levels, even while the markets are negative today. But my sense is that 1350, 1360 now remains an important resistance on the upside. So till 1360 is not crossed, it could be in a range between 1280, 1270 on the downside and 1360 on the upside. Above 1360, we could see some kind of a decent short covering move up to 1450, 1490 zone. So 1360 is the key here in Glenmark Pharma that needs to be crossed.
Okay, 1360 that we need to eye for Glenmark Pharma. Let's move on to another viewer query. That is, your Anunay is asking on Vijay Diagnostics, and he has bought it at 1119. And what should be done? The average price, or should he average or sell for the next 6 months view? If you look at Q3 numbers, it has posted good set of numbers. Net profit has risen about by 36% year on year, and even margins have seen quite a bit of an improvement. But on the charts, what do you believe? What should you do at this point of time? He's bought it at 1119 levels.
See, my sense is that this stock could enter into a period of consolidation for the next couple of quarters here. Because firstly, the stock which had never broken below its 200 DMA right from June 2023 has for the first time on Friday breached that level and closed below that. And we've seen a gap down opening. Although the stock from lower levels of 740 has seen a decent recovery up to 850, 870 now. But I feel that 930, 940 here, from a medium term standpoint, remains an important barrier to cross for the stock to come back in its own, the trend that it was in the last 16 to 18 months. So 930, 950 zone on the upside could cap the momentum, price momentum, which could be actually viewed as that most important level, which was not being broken. So now for me, I feel 930, 950 is that important resistance level. On the downside, 750, 770 zone will act as an important support, which is today's low. So it would be in this broader range. I feel you should just, the viewers should just hold on, should not panic right now. And while the markets would recover, this is a quality name apart from all these other top diagnostic companies. So a regional play here, but this could do well once the market recovers.
Okay, so hold on to this stock at this point of time for Vijaya Diagnostics. Let's move to another viewer query. He's asking the view on Titagarh Railways. Titagarh past 6 months, very sharp fall, over 40% downtick, and even the Q3 numbers are not very supportive either. Revenue has fallen, even the bottom line is also not doing well. How do you look on the charts perspective, Sudeep, for the stock?
Lavisha, the setup is quite weak now. If you see Titagarh rail system here, the way the chart is shaping up right from the mid-December time period, the stock is hitting a lower top, lower bottom formation on the weekly charts, and there's no respite in any week now. So what I feel is that 830, 825 zone now becomes an important resistance, at least from a reversal perspective. And until this 830 is not crossed, the downside is still open up to 730, 720 zone, and only about 830 to see some kind of a floor being formed for the stock, and then the stock could take at least feel that yes, from the current levels now the downside is over, or at least temporarily it could hold and then move up to 900, 930. So 830 remains a crucial number on the upside as a resistance, and above that only you could see some kind of a decent move here in this stock.
Okay, all right. The trend is quite setup is quite negative, however, for the stock. Let's move on to another viewer query. That is, your Pankaj is asking the view on Bharti Airtel. Bharti Airtel, how does the stock look like? Because past 1 month, the stock has been showing good gains. 5% uptick coming in for the telecom operator. Even Q3 earnings were quite good. Sudeep, what do you expect? Some positive on the horizon?
Absolutely, this is one chart that would everyone would like to see in this kind of markets now, where you're seeing lower top, lower bottoms at least for the last 15 to 18 weeks. in a lot of stocks, this is one stock which is kind of breaking out of its concession, of its consolidation, and that too near its all-time high. So my sense is that 1650, 40 zone becomes an important support zone here, which is the breakout zone which the stock had crossed on 7th of Feb. So that zone will be important support zone until this holds 1640, 1650 zone. We could see some kind of a decent recovery back up to 1760, 1780 zone. So this remains a buy on dips stock in the current market scenario, I feel.
Okay, all right. Let's move on to another viewer query. That is your G Cement is asking the view on M&M for the medium term. M&M on the stock on the charts, how does it look like? It looks like the stock has entered a period of consolidation, and past 1 month it has posted a 3.5% downtick too. But what do you believe, Sudeep? How does the stock look like on the charts?
Uh, Lavisha, this is one stock which I am now not being more comfortable with, because see, what has happened is that the stock has had wild swings right from January 2025, the beginning of January. The stock had fallen from 3,200 right up to 2,800. Thereafter, once again recovered up to 3,200, 3,240, and once again has fallen now. So kind of a double top formation, triple top formation there, and now the stock has have seen a correction with rising volumes. So whoever is holding long, I feel 2740, 2750 now becomes an important support zone. One should trail all their long positions with this stop loss, because below 2740 the stock will correct back up to 2500, 2550 zone. So 2740 remains an important support zone, and the stock is actually at a very critical position right now. So just be a bit cautious in be I would just request the viewers to be cautious in over leverage positions in this name.
Okay, all right. Cautious on the counter. That's what you're advising right now. But let's move to another viewer query. That is your Varsha Gajjar is asking the view on Newland Labs, and she's asking whether or not she should hold her book losses. She hasn't specified what price she's bought it at. But what do you believe on the charts? Past 4-5 days, the stock has seen quite a bit of a selling pressure, down about 21%. Where do you expect the stock to go from here on?
Ravisha, this stock also is in a steep downtrend, and lower top, lower bottom formations visible. Consolidation breakdown also is visible here. So I feel uh, 11 900, 12 200 now becomes an important resistance. Until that does not cross on the downside, 11,000, 10,700 also could be retested. So the setup is quite weak. Sell on rise would be recommended, or at least reduce the positions from here.
Okay, reduce the position from here. But we have another query that is on the capital goods segment, and which stock looks better? Is asking the view on ABB and Hitachi Energy. Both of these stocks, how do they stack up on the charts, Sudeep?
Navisha, if you see both the stocks, Hitachi Energy and ABB, I feel Hitachi Energy is kind of a stable chart where there's not been a bigger correction from higher levels. From 15,000, the stock is corrected up to 11,000, so which is around 25, 30, 32%. But in case of ABB here, the stock from the highs of 9,000 has already corrected around 60, 70%, and it's around 5,000. So my sense is that there's some relative weakness which is visible in ABB compared to Hitachi. So in case these are the two choices that the viewer wants to look within, then Hitachi remains a better option compared to ABB.
Okay, all right. Hitachi looks favorable on the charts. But just one last question before we let you go, Sudeep. What are your top bets? We have seen a volatile market, but what would you think would be a good buying at this particular hour?
There's one stock which is there on my radar, and that is Bajaj Finserv. Now, Bajaj Finserv, we've seen the stock showing some resilience, some better relative strength here on charts. And while the markets are on the downside, we are seeing Bajaj Finserv going from strength to strength, and around one could add between 1850, 1860 zone. keep a stop of 1810 on the downside, and the targets on the upside could be 1950 and 2000 zone in the coming few weeks. So it might not be an intraday day trading idea or from a 1 or 2 days perspective, but yes, the stock is a quality name from positional perspective, could be added into the folios.
Okay, all right. Bajaj Finserv is your topic at this point of time. But with that, we have to let you go, Sudeep. Thank you so much for your time, and thank you for answering of your queries so patiently.
Thank you so much, Lovisha, for this invitation.
All right. All right, let's take a quick check of the markets at this point of time. How Sensex and Nifty is doing. Sensex is down about 400 points. Nifty is also down about 138 points below that 22,800 levels. We have crossed the key support level that we were eyeing out for 22,800. That is also breached below, and we are standing at 22,790 at this point of time for Nifty 50 index. All of the sectors are breathing in the negative territory at this point of time. They're sinking and they're suffocating in the negative territory. India VIX has spiked up to about 6.5%. Mid cap and small cap indices feeling the worst heat too. Mid cap seeing a cut of about nearly 1%. Small caps also 1% cut coming in for the same. But on that note, let's quickly get on board with our fundamental guest of the show. We have Mayuresh Joshi of William O'Neill. Mayuresh, good morning. So good to have you back.
Morning, Lovisha. Always pleasure to be on your show.
Mayuresh, 13% fall now for Nifty. Would you term this as a last leg of consolidation, or can we expect more pain ahead for the markets?
I think the hope is that the selling will stop at some point of time, because there has been incessant selling that has happened over the last few days, last few weeks, the last few months as well. And therefore, I think a large part of the market negatives in terms of earnings degrowth has largely been started to capture in terms of the market fall. In terms of expectations of a delayed rate cut, with whatever data points you're probably seeing, with inflation and core inflation staying very, very firm in the US and across the globe. Though there are some eminent signs that inflation might taper off in the Indian context, we still have to manage the yield differential between the US 10-year and the Indian 10-year. And therefore, even in the Indian context, the rate cut cycle getting delayed, starting to get penciled in. And geopolitics, what Trump probably does in terms of tweets, what probably he does in terms of reciprocal tariffs, how much of an impact does that have on global economies and therefore global currencies as well. I think that is the volatile phase that the markets are probably going through. So I think the hope is that a large part of that selling is probably done. But I think a combination of these factors will keep markets on tenterhooks.
Okay. Mayuresh, you pointed out plenty of negatives, tariff jitters, even the higher yields, and we also have the subdued earnings. But what can be the positives where the investors can find some reassurance to hold on to equities for the long term?
So two, three things, Lovisha. I think one, I think with the tax cuts that have come through the budget, I think that's going to give a huge boost to consumption. There is no two ways about it. So I think the additional 100,000 that is going to come in terms of savings, either that gets channelized into savings or spending. I think either of that, I think, will boost the economy to a large extent. And therefore, as we head into the first quarter and the first half of the next financial year, you are expected to see a significant rebound happening in terms of consumption. And therefore, a lot of the consumption-led sectors might start showing earnings growth. What will also propel is a large part of the investments where private capex has been lagging. The hope is that with consumption picking up in the first half and expected to continue as we head into the entire financial year, a large part of that pool will get gestated and digested in terms of more investments coming through the private side. And therefore, I think the two legs for GDP growth will get a large part of support. And as the macro support comes through, the micro support to earnings will start coming through. The other element is rural economy. Rural economy is definitely showing signs of green shoots. It had been under the pump for the last few quarters. With a good Rabi harvest, the expectations of La Nina conditions brewing, which probably indicates that there will be good monsoon going forward and a good Rabi season to follow as well. There is hope that the rural economy will bounce back very, very smartly. And if that probably happens, I think it further fuels two aspects. One, I think consumption patterns evolve further as rural economy comes back. And the second element in terms of inflationary factors as far as food inflation is concerned, expected to come out, which is a huge support to the Indian economy. I think these are positives which the markets might work on.
Okay, okay, Mayuresh. Mayuresh, you talked about, the rate sensitive sectors or also the consumption basket. What is your view on the IT sector? Because what is happening globally, it looks like the IT sector might be poised for some benefit. But how do you find the IT space at this point of time?
So, Lavisha, I think it's poised it's poised for decent growth. I think if you probably look at a lot of commentaries, whether it's large cap IT, mid cap IT, and specifically mid cap IT, I think the kind of niche areas that we're probably looking at in terms of AI, generative AI, a large part of our company's pool of resources are being directed towards these niche areas, which will see significant amount of growth. Obviously, you've seen Chinese tech and the Chinese tech index move 20% over the last few days and weeks. DeepSeek, so on and so forth, I think has gone and caught the fancy of a lot of investors across the globe. And therefore, I think our sector as a whole, which are probably sourcers to a large extent, should benefit from the trend that is probably expected to still continue as far as AI, Gen AI is probably concerned. And therefore, I think a large part of the pool, if you probably presume the comments coming in from President Trump in terms of H-1B visas, if that probably comes through, I think a large part of the expectations in terms of outsourcing costs, not ballooning, providing support to EBIT margins, a large part of corporate tax cuts, if that are supposedly coming through, along with cuts across the economy as well, that provides a large pool for discretionary spending to come through, which can firm up this quarter and the next, giving huge support in terms of order flows as well. Uh, Valuations and late stage basis, as we see it in markets within India, a tad bit on the higher side, specifically for the mid cap sector and large caps as well. So I think valuations are not in favor compared to 5 or 10 year standard deviations. But I think if earnings is expected to come through, I think select stocks within the space can still continue to.
Okay, okay. Mayuresh, let's talk about some like in the broader markets because we can see that small caps are now officially in the bear territory. So, do you believe that this is the right time to start picking out some selective names from this space, at least for the names that have corrected about 50 to 60% from the top?
So I think our entire approach is growth investing, and our take is that so the markets have been very, very volatile. And considering both the macro and the micro aspects, I think the next few weeks, and as we end this quarter, the expectation is that Q4 might still be soft for India Inc. And therefore, I think the earnings downgrade scenario might continue. However, as I said, the hope is in terms of consumption coming through very, very smartly in Q1. And therefore, I think earnings for a large part of the market, which is consumer and consumption driven, should largely bottom out as we end this financial year. Obviously, I think global cues will keep markets volatile. Therefore, I think the next few weeks it will still be very, very volatile as far as the markets are concerned. Therefore, our approach has been being a little bit more cautious in these markets. I think you don't try to be more adventurous. Let the markets settle down. Let's see how global events are playing out as well in terms of all that we've discussed. And how does that play out in terms of market reaction and sentiments as well? So being very, very cautious. Stocks have fallen significantly, as you rightly say, and a large pool of stocks have. But I think it's not wise to probably enter aggressively at this point.
Okay. So you're saying that we shouldn't be adventurous at this point of time. So, Mayuresh, does that mean that for the medium term, at least investors to stick to sell on rise strategy for the time?
Yeah, so I think you should probably also. I think just one point to add here. I think one must moderate the return expectations for this financial year because I think this financial year we go through a lot of upheaval on all these factors based together. I think what we delivered in terms of index returns over the last 2.5 years, I think that might be a little bit difficult to replicate this year. You'll need to be a little bit more sector stroke stock specific. I think it's going to be a stock pickers market, Lavisha, this financial.
All right. With that, we have to let you go, Mayuresh, with the thought of being a stock pickers market. But thank you so much for your time and hope to connect with you soon.
Thanks. Pleasure is all right.
All right, let's take a quick check of the markets. Well, definitely both the benchmarks are still in the red, deep in the red at this point of time. Sensex is down about 500 points. Nifty is also way below that 22,800 mark, 22,785 at this point of time. All of the sectoral indices have dipped in the negative. However, we can see Nifty Media Index seeing some kind of recovery. 0.2% gain coming in for Nifty Media Index, and if even the Nifty Pharma Index has shown some signs of resilience, about 0.4% gain coming in from the pharma index too. Apart from that, Nifty Auto continues to still feel the heat. 1% downtick coming in for there, and even the Nifty IT index is also one of the top sectoral underperformers. Nifty mid cap and small caps, bit of a recovery we can see for both of them. They have trimmed some bit of a loss. Mid cap seeing a cut of about 0.4%, small caps also 0.3% at this point of time. So, there is some kind of recovery, which is small recoveries, which is taking place in the markets, but we'll see whether or not this is sustainable or not during the end of the day. But with that, we've come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing how the market texture is, how the stocks performed until 10. Signing off, do stay tuned to moneycontrol.com for all the news updates and market insights.